Probably one of my favorite strategies to recommend to clients is the 401k. And in this video, we're going to talk quite a bit about just how to do that. So why do I like 401ks so much? It's another retirement vehicle, another retirement account. And in this case, the contributions are usually taken from the employee's wages. So if you are an employee in your own business, meaning you're in an S corporation or a C corporation, something like that, you can contribute up to 100% of your wages, or any percentage up to the max, which is right now $19,500. Employers can also contribute to employees' 401k accounts. The max contribution for 2021 is $58,000. And my general stance on this is if you're going to put more than $10,000 a year into a retirement account, then the 401k tends to be the best option. And that's because you can put more money into the 401k for less salary, forcing yourself to pay yourself a salary, than you can with a SEP IRA. If you're going to put less than $10,000 into a retirement account, I tend to stick with the SEP IRAs. Also because the 401ks usually have some kind of fee that the custodian is charging, where a SEP IRA is pretty inexpensive to have. If you're over 50, you can make catch-up contributions, and retirement plans are federally protected under the ERISA guidelines. As I said before, it is a retirement account. It's employer sponsored. So if you're a sole proprietorship, this is not going to work for you. And if you're a sole proprietorship and you haven't looked at our sole prop / partnership versus S corporation planner to see if it'd be more advantageous to be an S corporation, I encourage you to do that. For an S corporation, you could use this. They are more complex than a SEP IRA. They are more costly, but they tend to be better assets when it comes to recruiting employees and actually running the plans. I think sometimes 401k plans are a little bit easier because they all run through payroll withdrawals, and it's kind of a very well-run machine once you get them set up. In the planner inside of Tax Planner Pro, you can see in this example, I've got the taxpayer making $48,000 a year in wages. I have the spouse making $30,000, and right now both of them are showing current annual contributions to their 401ks of $18,000. So the system is saying you could contribute a little bit more and also calculating what they can save. Now, in a situation where your clients don't have a 401k, these amounts would be zero, these current 401k contributions, and the maximum planners here will be much, much larger because there's much more room against $19,500 to save. What I haven't put in here is what the employer could also do. So keep in mind, you could really make these, $58,000 a year for each employee you could put away. So if it's you and your spouse in your business, you can put away $116,000 a year into your 401k if you run your salary right and do all the things that need to be done from a contribution eligibility perspective. But this is what you'll see inside the planner. It's fairly straightforward. It's kind of like the SEP IRA. So the savings amounts are calculated in the same way, where we rerun the projections based on each of these contribution amounts to see what the new tax amount is. But again, I think the 401k is easier to get money into for the same or less amount of salary. If you're wanting to set up a 401k, it's fairly simple. If you find a 401k provider, most of this is all done for you. I can tell you personally, my companies use a company called Guideline 401k, which is a partner of Gusto Payroll. And it's very, very easy and very, very affordable through Guideline. I don't get anything for saying that. I don't have any kind of discount code for you or anything like that. I'm just saying what my experience has been, and they have been very good. But there's 4 steps to setting up a 401k plan here. You got to create a plan document and do some record keeping kind of ideas. The main thing I wanted to focus on here was most of the time I tell small businesses that you need to have this done before 10/1, because on a new safe harbor 401k, the employees need up to 3 months to get their contributions in to satisfy some testing requirements. So 10/1 would be the last day to try and get something like this set up. It's probably even better to get something like this set up over the summer, something if you want to do it right after tax season. That way everything is good to go. This is another strategy with a high benefit and a low audit risk. You're very rarely going to be audited on your 401k unless you do something wrong, which the providers usually aren't going to let you do. And the benefit is a direct, dollar for dollar reduction in your taxable income for what you contribute. And I think it's a very good strategy, just like the SEP IRA, in a way where most strategies, and I say this a lot, most strategies require you to spend money, i.e. take your money and give it to someone else in order to get a tax deduction for that. These retirement accounts are some of the only options where you actually don't have to give your money away. You are still putting money into an account with your name and just letting it sit there until you retire, and you're getting a tax benefit for it. So I very much think that the 401k is a great tool to do that. As always, and we have these in the planner itself, if you need support, you can contact us at support@taxplannerpro.com. You can use the chat button. I've put some links here as well as in the planner for you to look up some other resources. And if you need anything, let us know. Other than that, that is all I have to say about 401ks. I hope you find this beneficial and help you save some tax dollars. Until our next video, thank you very much.